The world is on fire, tariffs, trade wars, and in 2025, the stock market's riding at roller coaster volatility. But inside of that chaos, massive opportunity in the S&P 500. Now, the S&P 500 is a target-rich environment and a way to make some serious gains. In this video, I'm going to show you the best ways to trade the S&P 500 using the CFDs, the ETFs, and futures contracts. Okay, let's trade it. The S&P 500, short for Standard & Poor's 500, is one of the most widely followed stock market indices in the world. It tracks the performance of 500 of the largest publicly traded companies in the U.S., spanning sectors like tech, finance, healthcare, and more. Think of it as a snapshot of the overall U.S. economy. When the S&P moves, markets listen. Coming up, the best CFD, ETF, or futures contracts to get the job done trading the S&P 500. The most basic way to trade the S&P 500 index is through a thing called an ETF, an exchange-traded fund. Now, an ETF, think of it like a stock. You buy a share of the ETF. Now, the way that it's different from an individual stock is that it is a basket of holdings. And what those holdings are in the case of an S&P 500 ETF is the companies of the S&P 500. So remember, your ETF is like a stock, except it's going to track things like an index for you, and you're going to buy shares. Now, let's go ahead and take a look at some of the most popular ETFs that face the S&P 500 out there. The SPY is definitely one of the biggest ones, one of the most popular ones, but there are a number of these contracts. I'm going to talk about those in a second. Why trade the SPY? What advantage do you have? There's no time limit, so you can buy and hold this thing looking to get in on maybe a big bullish move. It's really tough to do that in derivatives, especially with maintenance margin costs and rollover fees and whatnot. The second, it's a cash deal. If you have the cash, you can go right to your retail platform and buy these things relatively quickly, actually almost seamlessly. If you're with Robinhood or Charles Schwab, or you have another stockbroker account, so you can definitely trade these very, very easy. Now, a couple words of warning. There are things called tracking errors. That means that these ETFs don't necessarily track the S&P 500 perfectly. Okay, that's an issue. You need to research exactly the ETF you want and find out its tracking error. And number two, there's also fees. A lot of times these ETFs have custodian fees. Those custodian fees are the cost of running the fund, and they pass that on to the consumers, and those can eat into your profits. So beware the tracking errors and custodian fees. These are a few of the most popular: the Spider S&P 500 ETF, the iShares, and the Vanguard. Those will all get you up and running. The ticker symbol is SPY. So if you're looking for a longer term play, maybe on the S&P 500, the SPY ETF may be what you're looking for. On the futures markets, the contracts to trade facing the S&P 500 are the E-mini S&P 500 and the micro E-mini S&P 500. Now, offered by the CME Group, they offer us several advantages to really get in there and trade the S&P 500 with a little bit of confidence using a derivatives contract. That means we can apply more leverage, and I'm going to show you how right now. The ES contract is going to give you volatility every day, great market depth. You'll notice there's no spread to contend with, and also low intraday margins. Your broker should be able to give you right around a $500 per contract intraday margin on the E-mini S&P 500. Now, we also have the micro E-mini, which is just a smaller version of the E-mini S&P 500, but the micro E-minis offer you the same great volatility. The market depth isn't quite as great, but still there's a lot of volume in there, and you're not going to have to contend with the spread, and also very, very low margins. The E-mini S&P has low margins. The MES has very low margins. So let's show you what I mean by margins. Now, $500 intraday margins, very low. That's going to let you probably take control of several contracts if in fact you want to take that kind of size. But the contract specs you have to be aware of is every tick is going to be a quarter point, and every tick is going to be worth $12.50. So if the S&P goes up a quarter point, 0.25, you're going to make $12.50 on a long. If it goes down a quarter point, you're going to lose $12.50 on a long. So those fluctuations can really get you overextended, especially if you see a big trend day in your multiple contracts the wrong way. So be very, very careful with that. If that sounds too expensive for you, the MES, the micro E-mini S&P 500 is exactly what you're looking for. It's going to be that same quarter point tick size, but instead of $12.50, it's going to be $1.25. Dial in your granularity with the micro E-minis. If you got a little bit more money and you want to be more aggressive, you trade the E-minis. It's that simple. The ES and the MES, great futures contracts for trading the S&P 500. Another way that you can trade the S&P 500 is through contract for difference products. So before we begin, if you're in the United States, you can't trade CFDs. You're going to have to trade futures. But if you're abroad in a municipality that does allow CFD trading, then the US 500 could be for you. Now, a contract for difference product operates a lot like a futures contract. except that it's going to be operating in an OTC fashion as opposed to being exchange traded. Now, as far as traders, why would we trade the US 500 CFD? Number one, huge leverage, and I'm going to show you exactly how huge in just a second. Number two, volatility. You're going to see a lot of volatility just like you would in your futures contract. And number three, low or no commissions. Believe it or not, you can get no commission trading accounts to trade something like the US 500 and only have to deal with the spreads. Now, the spreads you are going to have to contend with, but they're not necessarily as huge as some markets. It just really depends on the level of liquidity on that given day, but the spreads can be relatively tight. Typically, they aren't that big of a factor when it comes to maybe taking day trades, but if you're a scalper, those spreads may actually play into it, and you need to find a broker that has extremely tight spreads. Now, the CFD products, there's many of them out there. There's the US 500, there's the S&P 500 index. These are OTC products, so they can all come through your introductory broker, so it's very important that you have a good broker if you're going to trade CFDs. We're going to show you right now the leverage, and the leverage is really great. Head on over to Switch, check out the indices lineup. They have a lot of it leverage up to 1 to 1,000. And when we're talking about stock indices, we're talking volatility. And right there, you can see the S&P 500 is offered. The US 500 is going to be one of those CFD products, and it's offered with leverage up to 1 to 200, which is fantastic. No hidden fees and fast execution. So a lot going on with these CFD products. Just remember, if you're in the States, you're going to have to trade futures. If you're abroad, you can trade the CFDs. A lot of volatility, a lot of opportunity there. So this may be something worth looking at if you're in a municipality that participates in that US 500 CFD contract. It's yet another way to trade the S&P 500. Are you ready to trade the S&P 500? Well, check out switchmarkets.com. They have thousands of global markets, fast and simple funding, and 0% commission accounts. Get started in 3 easy steps. Open your account, a minimum deposit of $50, and then start trading. It's that easy. Bring your ambition into focus with switchmarkets.com. The S&P 500 gives you broad exposure to the U.S. stock market, and it's a powerful way to diversify your holdings while tapping into the strength of America's largest companies. Now listen up, no matter how you trade the S&P 500, whether it's ETFs, CFDs, or futures, one thing is hugely important: risk management. It's non-negotiable. Now, if you want a proven strategy, check out our opening range breakout video. It's a real game changer. Don't forget to like, subscribe, and we'll catch you on the next one.